All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for January 28th. I'm sorry, January 29th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 415. My name is David Cosbetter. I'm the creator of TimingResearch.com, and you should be seeing my charts right now. And today I have arranged for the option professor to be back to moderate, and for Norman Hallett of thedisciplinetrader.com to be with us. So I'm going to go ahead and turn it over to the option professor.
Okay, great. Thanks everybody for being here. We got a bright early Monday morning and we got a full week ahead. We got 40% of the market cap of the S&P reporting this week. That sounds enormous to me.
Wow.
And then of course you've got the Fed meeting and then you've got the jobs report. So never a dull moment here in Investorville. With us is Norman Hallett, who has been in the markets for a long time, is very knowledgeable on the markets. He's going to share his views. And he also does quite a bit of work with people who are preparing to try to get a funded account. He's going to explain how he can help you in that regard too. But before we get started, Norm, a background on yourself and a little bit about what you're up to.
I appreciate that. And thank you. I just started a rowing class this morning. I think if there's a best thing I can tell a trader, it's get some exercise in the morning, get those juices flowing and get to work. I know for me, I'm a morning person. In any event, I started out in the option business, and I actually ran one of the largest option firms in the country back in the 1980s, and left them in 1988. Joined Payne Weber and did some things for them in the stock area, and I was a commodity specialist for them. In any event, but really the last 20 years that I've spent in the market has been focused on two things. One, helping traders construct trading plans that work for them, rather than trying to change your mindset and fit into a trading plan. You can do some things in trading plans that you can help match who you are. The other part is the other concentration is really in the mindset area, where you do change the way you think through working with your subconscious mind, which is a fairy tale to some people, but it's now become science. So, I just believe that the 90% of traders who are not successful are not in sync with the importance of training the mental part, as well as the most of them have pretty good trading plans, ones that will work to whatever degree or not, but would be in the green and not the red. And yet the red is caused by the inability to run that plan. So I always have no matter when I'm building trading plans or offering trading plans, I'm constantly referring in my mind to how can this help or hurt a trader who's trying to follow it from a mental and emotional standpoint. So I think that once you try to separate those two, that's when traders get in trouble, let alone those that have the absence of any work in the mental part. So, and I think traders are starting to realize it, Jim, because I did a webinar earlier this week, actually on Saturday, called the psychology of prop trading, and it was very, very well attended. So I think that those people, even though that in prop trading you can, that you trade somebody else's money and get the 90% of the profit, it sounds great, but you're paying fees along the way to help that structure. But still 90% are not being successful, even though you would think that the stress level would be down losing somebody else's money instead of your own. So there's a lot of so the psychology never leaves, and I was very, very pleased to see that those were. So that's what I'm about, and I'm sticking to it.
Yeah, and we'll talk a little bit more about how you can help the people with the funded account, and of course the psychology of trading. I mean, that's what it's all about. Doesn't surprise me, the people that are going with funded accounts, they're obviously very, very invested in trying to get those levels passed so they can get funded. So there's pressure there. And then, of course, without the disciplined approach, they may just be, getting very emotional, because also they are, like you say, paying some fees to play the game. So, Bottom line is it'd be nice to come up with some methodology that could help them. Let's get into these markets a little bit, and I'm gonna, let's try to rotate around stuff because there's things going on many different fronts right now. And so right now we got the stock market up there, and I don't know how you feel, Norm, but my feeling is that where the S&P goes is also where the Nasdaq and the Russell go. They just go at different speeds. So in other words, I don't think we're going to see a rally in the S&P. Well, you're not going to get anything out of the other guys, nor do I think if the S&P had a correction, those guys would be immune. So let's focus on the S&P because it is the big kahuna. And what do you see here on this S&P?
Well, I agree with you. I mean, just from a math standpoint, you've got 500 players in the S&P. You've got, many more in the NASDAQ and less in the, so, it's a good mean to take a look at. I like that wider view a little bit more. If I can just take a look at that. I mean, look at this chart. I was looking at it today before we started because sometimes I don't pull back enough. But this is, I have not seen a more classic bull chart than what I'm looking at here.
Yeah.
I mean, it's unbelievable, right? So starting from the first low that you see on the left with that first run to the peak right in the middle of our screen there, followed by a beautiful wave down that corrected, looks to me about just below 50%, somewhere probably in that Fibonacci 6-1 type range. And now another move up, breaking the old high, and another flowing, rolling move to its current position. I don't see anything really here but a continuation.
Yeah. I mean, clearly that's the way it is. Now, the only thing that changes things is when things change. And the reason everyone stampeded, obviously, the first thing is the Fed was talking about cutting rates. The second thing is obviously it was pretty clear we were getting moderation in the inflation. And then the economy with the GDP was up 50% more than they thought. So you have a strong economy, you got a moderating inflation, and you got a Fed that's supposed to be cutting. Those are the three prongs on the stool, I think, or the three legs. Are any of those legs vulnerable that would change the tune after we go through earnings season? Because, obviously they're also plowing in because they think the earnings are going to be good. So after earnings season, any of those three legs vulnerable, you think?
Yeah, I think it's a good analysis. I mean, in general, it's been, listen, when all these earnings coming up, that's looking in the past, and that's good. I mean, you build the future on the shoulders of the past. But what looks like it's about to happen, what's formulating is the fact that we have strong jobs and a strong economy, and yet we are taming inflation pretty darn well. I think the Fed, although they came to the party late, I think they're doing a heck of a job controlling it from here. And looking ahead, to me, it just seems that we will start some rate cuts, whether it starts in March or in April or in June. But easy money just means a higher M1, more money available for growth. At the same time, that's all of that is good. It's good for growth. It's good for profit. I just see I see a better year than most of the pundits that I'm seeing. Yeah. Most pundits are looking at 4 to 6 to 8%. I think we could be in that 10 to 12% year or even better. I mean, I'm very, very positive on what's going on. I mean, I'm a little bit more concerned with the world events.
Yeah, right. Which is a wild card, right? Is a wild card.
That would be upsetting. I don't like getting into as many wars as we seem to be fingering into. Mm-hmm. And I think that, that could, but, that's going to help the defense stocks, and it's going to help energy, and it's going to help certain sectors of the market. So I think that your initial thought about looking at certain sectors is really where stock equity traders should be spending their time,
Yeah. Because plowing into the AI trade at this point, probably has a little bit more risk to it than many people may think. Because, I read about Microsoft, they are not making money on AI. So This AI, generative AI generating profits and stuff, that's still kind of a theory as opposed to a reality right now.
Yeah, I mean,
So
I just think that, this may not be the perfect comparison, but I look at when you have something so revolutionary that is introduced to the market that has investment potential behind it. Bitcoin is something that came out that was doubted, that was controversial, and now it's finally being at the point where it's starting to be accepted. The charts are starting to kind of normalize a little bit, and it's a little bit easier to analyze. However, at the same time, I'm looking at the AI situation as something very similar, very new here, very very confusing. I mean, look at what's going on with they had Biden's voice on a for these primaries, telling people not to vote. The misuse will encourage doubt in AI, encourage control in AI, and therefore, a setback in some of these valuations because of AI. But eventually, it is the thing, and eventually it'll be
but
figured out.
eventually is a pretty big word sometimes, especially when they bid something up to like $700 a share almost, or they like Microsoft is very interesting. You want to look at Microsoft MSFT up there because their stock is trading at about a 20% premium on the valuation than normal. And there's some interesting stat. If you put $5,000 into Microsoft when it came out in 1986, it's worth 20 million today. But if you had bought Microsoft in 1999 when it was highly valuated, it took you 10 years to get your money back. So that's kind of a two, that gives you two stories on the same stock a little bit. You know what I mean?
It's a timing thing. I want to ask you about you zoom in on the equities. I'm more of a commodity guy, but I have stocks because of retirement. But why has Microsoft been such a steady player? Is it the management compared to, say, something like, I mean, not saying Apple is not a steady player, and I know they have their
but the Apple doesn't have the kind of profits these guys have. These guys have a lot of profits, and they have a lot of growth because they have that thing called Azure, and that is cloud computing, which you can eliminate employees, which means you're going to save money, and it can do a lot of things for you. And their partner in that is that Amazon AWS, and they are taking market share away from AWS because their spiel is that they're a software company, and then there's a lot of other things they can provide that Amazon can't.
I see.
And so basically that's where they're making their money. And that is a highly profitable business. And that's why the stock has really gone up. Now, of course, it got the big kicker because everyone goes nuts with this AI. But, that might be providing a premium to it that may not last. That's the thing. In other words, great company. Obviously, valuation is quite high. Obviously, a lot of enthusiasm about AI. And so maybe if that quells off a little bit, you see the blue line is quite a bit underneath it. And so it could be a situation where a reversion to the mean is not off the table. Maybe not tomorrow, but maybe by the March timeframe or something like that.
Yeah, that's a nice looking
because
chart.
once they announce these earnings, you're going to need new fuel for the fire to keep it going. And once the earnings are behind you, sometimes there's a lull because you run out of news. If you run out of news, people have a lot of gains here. And if they want to take some gains, a reversion to the mean, that would be more the high probable time. But there's no moving averages pointing down on these things. So, anybody who's trying to just step in front of a freight train, they're probably going to get it in the head. You know what I mean?
Yeah, no, I'm just looking at its, how beautifully it's run.
Yeah.
The 200 has maintained its bottom. When you peak below the 50 like this, that blue line, you get some beautiful buy signals as soon as it crosses. So really like,
and the RSI is scary, isn't it?
Yeah, yeah.
I mean, they could produce records on this thing. And I think one of the reasons you're probably positive also is there's a lot of people still in money market and they can't just let this thing go to ad infinitum without getting in.
I do want to mention something about RSI that I think people tend to misinterpret. and that is that because we're over, some believe over 70, some like to see it overbought over 80 in the RSI. But whenever you're over in those levels, the first thing that comes up is that this thing is overbought, and let's look for a signal to short the market to correct that enthusiasm. But many times, as it did previous to this level, where it is right now at the 80 level, it did it before. But look at the movement.
Yeah.
It maintained it. It really doesn't necessarily mean we're about to take a big movement down. A lot of the time, it means that just an equal amount of time, it means that we have a very strong market, and it's just going to continue to either accumulate sideways in that strength and then move higher, which it did here, or it'll just keep going higher. But a high RSI doesn't mean that it's about to break. You have to wait for the signal.
Yeah, no, I wouldn't touch this thing on the sell side until some of my moving averages were rolling over and pointing down. Because if it does have a correction, there's plenty of real estate underneath. You don't have to be the first guy to sell it.
That's true.
You know what I mean? In other words, and if you do sell it, you'd like to have a crowd behind you and not be the only guy in the room selling it. You know what I mean?
Right. But these are beautiful charts. I mean,
yeah. And they have earnings coming out this week, so we'll have a lot better clarity on things. But I thought it was very interesting when I was watching Bloomberg, and they were actually talking about AI and the generative AI and how much money they're going to create off of this thing. And the reality is that nothing is coming in at all. So that hit me kind of like Bitcoin running up. When Bitcoin, like Riot and Mara and Coinbase, they had such big moves going into the ETF. It was just classic buy the rumor, sell the fact. You know what I mean?
Yeah, and it's as I said, when anything is dramatic. I mean, there's two dramatic shifts in financial perspectives when you're looking at Bitcoin being an unregulated worldwide asset bank, categorized and controlled in a way that most people don't understand, and I'm not sure I fully understand it.
Exactly.
I mean, I mean, mining. But there are drawbacks to everything. The energy that it takes to, the energy takes to mine these Bitcoin. They're being thrown out of certain locations because the energy use is just too great.
Right.
So it's almost like electric cars also. I mean, electric cars are going to be the thing. I just got myself an Ioniq 6.
Okay.
The Hyundai Ioniq 6. What a car.
Great.
I mean, they've really done. It's got 360 miles. I can go on one charge.
I kind of think what they should have done, though, to get the people engaged is start out with hybrids and then morph into the totally electric, because then they wouldn't have to deal with all of this. There's no stations around, and in the cold weather, you can't do it. In other words, you could have got them going on, half and half milk. You know what I mean? Then moved them into milk. You know what I mean?
Yeah, well, you learn to figure that out. Actually, the market is going back. There's a lot of softness in the electric car, and they're going back to some of these, the combo cars where you use both. But you can, my compensation has been that my wife has a Lincoln Continental. She loves a big car.
Right.
And so when we need a car with the mileage, I mean, I go 7,000 miles a year.
Right.
So, it doesn't take me long, and I fill up at the dealership right around the block for nothing,
Right.
And it takes me an hour to go from 20 to 80. But I'm learning, but I can see where it's a headache. But, I think what we're talking about is everything needs to be matured.
Right.
And certainly things like Bitcoin is in the more mature phase. And this AI is just starting out. So there's going to be a lot of volatility. I think that you have to have a piece you have to have a finger in the market. I think anybody that doesn't have 1 or 2 or 3% a buy and hold for the leaders in that area are probably going to miss the boat on some of the big returns, over the next 5 to 10 years. But you have to. Where would you go, Jim, when it comes to if you had one or two plays to hold long term in the AI movement, where would you be?
Well, I mean, I think the AMD is probably a better value than Nvidia from the standpoint of, and they are the alternative right now. But again, all of this stuff, I mean, I'm a reversion to the mean guy. So not at gunpoint would I buy any of this stuff because, you're supposed to have bought it, 2 months ago, 3 months ago. So your periscope should be on stuff that's going to happen, not stuff that just happened. You know what I mean? This is a great way to lose a lot of money, not unlike, running into Coinbase and Mara and Riot going into the and MicroStrategy running into the ETF. So,
Well, you
I
just
mean,
gave
like
the
I
best.
say, these things can keep going. I mean, like, I wouldn't be buying Lilly up here. I just, I don't like to provide liquidity for the smart people who bought at the right time. You know what I mean?
Well, you just gave the best example of timing in Microsoft. So I
Yeah.
think that I think people should be listening to you about that and not me.
Well, and like I say, I'm not saying it's going to happen tomorrow because it's not happening tomorrow because none of my indicators are pointing down. But believe me, I'm waiting for them to point down because I think the elevator, when it does roll over, there'll be plenty of people who want to get on. Why? Because everyone's got the long side going. Everyone's plowed into the long side. There's plenty of, and who's been selling? You're a veteran guy now. Anytime you get a market like Lilly or Nvidia or what we're seeing here, somebody's on the sell side. Now, do you think it's the public? Or do you think it's market makers? Okay, well, let's assume it's market makers. Do you think market makers are trying to give the price away at the best price possible? Or do you think they're trying to take all the volume, all the liquidity in at a very high price, knowing fully well that at some point gravity comes back in and they'll get their money back when it drops? That's my view.
Well, you're seeing the fight right there in the last. I mean, not only are we looking at small day ranges in the last 2 weeks,
Yeah.
but we're looking at an unusual doji series, almost spinners and dojis, without any distance between the open and closed in the last 7 or 8 trading days. I mean, something is going to some decision is going to make. This is indecision. What you're saying.
Yeah.
And
But
the
it's also
markets.
not a downtrend. So I have no interest in stepping in front of freight trains. It's not necessary. There's 5,000 stocks out there. I don't have to be in these. And so the bottom line, but I do notice that they are extended. And I do notice that if they start running out of steam up here, like their relative strength starts lagging and all that kind of stuff, and you get a turnover in a moving average, you bet I'll take a shot. But you have to be patient, because if you're not patient, you're going to get run over by the steam train.
Yeah, this is just strong runs here. I mean, even if you took away the blue line and trying to make a case for some sort of topping action, you couldn't do a very good job with that recent breakout.
Yeah, and let's turn over to some commodities here because I've done very well lately with these energy shares. Why don't we look at something like Schlumberger, SLB? Yeah, energy went down to 67, $70 a barrel, and I thought it was a pretty obvious turn. SLB for Schlumberger, and you see got a double low there, but look at that RSI. So I take my shot down there, and options with a week to go or something, they don't cost squat, and you get a pop like that, you get some real action on those options. So obviously now it's running into some problems, but I'm on the Alumni Association now anyway.
Yeah, is that I'm looking at? Is that still the 200 and the 50 I'm looking at?
Mm-hmm.
Yep.
Yeah, I mean,
But I thought that was a big divergence, so that's why I took a shot because call options when it's at those lows with a week and a half to go, they don't cost very much. You know what I mean? Like say the stock is at $49 and you buy a 50 call or a 50-50 call for $1, it jumps up to 53. That thing's going to get a lot of action on it.
yeah, I wish HEMA was with us. HEMA ready out there. If anybody ever wants to, somebody knows what they're doing with the RSI. I know that I quote her all the time,
Yeah.
but she would have. I'd like to hear her opinion on this. I think that the RSI. When I'm looking at the performance between the SPY and Schlumberger, and of which there needs to be some catching up here also. And it looks like the time may be now.
Well, like I say, that's why this is one to monitor now, because right now it's running into some resistance, and also oil ran into some resistance around $78 a barrel. So,
right.
again, the game at 70 is different than 78. The game on Schlumberger at 49 is different than at 53. You know what I mean?
Yeah, and look, it's just bottomed right at that accumulation back in June, July. I mean,
Mm-hmm.
it's just really perfect
Yeah.
to be anticipating a flip back up of 50 over the over the 200, so that you can get, some distance out of it to that old high that was achieved back in September, October. So I think there's probably a good play here, but you have to be patient
Yeah.
because especially with 40% of the earnings coming out in the next couple of weeks. So.
Exactly. What about Halliburton? That's another energy servicer, and it was pretty much the same movie. As you can see, another divergence there at the bottom, and a nice pop, right?
Yeah, those hooks can straighten out if you don't watch it, but
If you're
that's
trading on short-term options, though, this is the kind of stuff that can be very helpful.
very similar chart.
Yeah, because
Um,
these short, like when you're taking the other side of what everybody's been doing, because you can see some kind of a reason for a turn, the options are extremely low, which means what? Your cash out of pocket is not bad, and if you lose it, you lose it. But if it does pop, those options have a lot of ability to expand in value. And that's, if you look at the volume on short-term options, it's enormous, and that's why people are playing this game, because you get leverage, limited risk. You know what you're going to lose, but
mhm.
you can, if you buy 10 options for, for I don't know, 10 options for $500 or whatever, uh, you know, and they move, you can get some pretty good action. There were good action on what do you call it last week? Put options on Apple.
Yeah,
Apple was trading above 195, and the options that expired on Friday went down to 50 cents. By the time they went home on Friday, they were at 250 or something like that.
yes, just a lot of markets accumulating. Can we take a look at Freeport? I want to take a look at
No, believe me, I'm involved with that too.
yeah, the
FCX,
copper. I want
copper
to
and gold right now. if they, like you say, if they're going to pump up the money supply, if they're going to expand money and credit, it can't be unhelpful to these things. So I definitely am on this one too. Yeah.
I mean, copper has the ability to. I mean, look at this
Mhm.
swinging sideways action.
Yeah.
Over this period of time. What is this, a year? Um, and with the freeing up of M1 and the when the perception of interest rates um, start to become reality,
Yeah.
uh, plus there's been a lot of the money that's been appropriated uh, with Biden's bill, the Build Back Better. A
Exactly.
lot of that money hasn't been spent. A lot of that is
Right.
still being appropriated. And when this thing, copper could very well be one of the biggest movers in the next couple of years. So I think I certainly we want the copper market. Maybe later I'll share the chart. But the that market is looks to me like, listen, when a market goes sideways, I've mentioned this before. We used to take a compass and put the pin on one side and the pencil back on where the accumulation started, and then we'd leave the pin where it is and spin it up. It gives you a potential of what the breakout capacity is on some of these things. And when
Yeah.
I see this kind of a rolling year where we've got uh, where we're strictly within bounds that they're very consistent like this. When you get the breakout, these things, these are the kinds of things that make people rich. So but you got to anticipate it. You got to kind of put it all together and be watching for it. So I know that you're always on
Well, I
top
mean, this
of
thing is
this.
intriguing as a strangle to me, possibly, because the options are fairly inexpensive, and you could build a case breaking either way. So, if you can do both sides, you can, and you get a lot of volatility, you
Mm-hmm.
can be wrong on one side and still come out net ahead. So this kind of stuff, and, Newmont Mining, NEM, you want to look at that one too. Um, You
Yeah.
know,
Do they still
that
trade They still trade American South African? Does ASA still have stock? I don't know.
no. This is your game if you want to be in the Cadillac of gold stocks.
This
This
is
is
Newmont now. Yeah.
yeah, this is the big kahuna of gold stocks. And so you can see it's flat on its butt here, and the call and put premiums are very, very low. So if you believe that there could be a significant move coming, investigating a strangle where you buy calls and puts at the same time is not a terrible thought.
Yeah.
And
Well,
you
I
can
mean,
see that RSI, is that RSI diverging a little bit down there, maybe?
there it is. I mean, you've
So
always
that would
got your eyes
mean,
down there.
yeah.
Yeah, yeah, absolutely. I mean, again, you look. I mean, you're working against a potential triple bottom kind of thing, and if you even go, those people could say, head and shoulders bottom. If you look at a chart long enough, you'll pretty much see everything. But but this. What surprises me, which what I believe why Newmont could really have a pop looking at this chart is the fact that the gold chart looks much better. And when you have that kind of divergence between the gold, I mean, this has it's also kind of sideways, but it has an up feel to it as opposed to Newmont, was markedly lower.
Yeah, I
So
mean, the problem with Newmont, Freeport could be that if the economy is really going to slow, and if the higher interest rates are going to cause, and the inverted yield curve is ever going to cause a slowdown, which has not happened, then obviously the copper could get whacked from that.
yeah, yeah. I mean, look, gold is. I'm surprised that gold has been capped like this. But when you have interest rates going up to fend off inflation and prices are high, gold doesn't move. Gold goes sideways really to
Yeah.
lower. But then when they start easing again, money supply comes out. The prices don't go down in the grocery store. They just stop going up as much, but the feel is there, and that's when consumers really start to pile on the gold. So I think I think all the metals is finally an area where people can really start watching. Silver looks good too. I mean, you've always got
Yeah, let's put the silver up there like on a Pan America Silver, PAAS, because that is one of the ones that really get going. You'll notice it's about half price. So, that's what confuses people in the metals business. I have some people who are in the metals business, gold and silver, and they're a little surprised how poorly the mining shares look compared to the silver and gold, which are still at fairly elevated prices.
I'm one of them. I mean,
Yeah.
look at that chart. This is not this is a chart that needs to be uh,
Yeah.
uh, feared
Yeah.
almost. I
Yeah.
mean, they.
But I'm sure the SLV doesn't look much better. I mean, it's going to, because this is one of the main components or one of the components of it anyway. So,
The light blue line now is SLV.
Oh, the light blue line is actually silver.
Yeah.
Silver.
Yeah,
So,
this one right here
yeah.
is
well, is it
silver.
above? Can you put it where the moving averages are on it so we can see? Are they above the moving averages on SLV? Because I would doubt it is, but you never know.
Oh, I don't know if I can add moving averages, but I can switch over to.
Yeah, just switch over to it. Yeah,
Switch over. Let's see.
because that chart looks fabulous. But yeah, this one's running into resistance here. It looks better in PAS, that's for sure, though.
Yeah.
Yeah, and, listen, gold and silver have been, listen, they've been lackluster, and when that happens, you see the sag that you're seeing in these mining stocks. But this is a building up of potential. But as you say in the strangle, which way it starts off is going to be could be taken advantage of in that with that response.
Yep. With regards to the currencies, I know you like to watch those, and I was wondering, does that Japanese yen look like it's anything for you?
The Japanese yen is in a place where I think it wants to start to head lower again. It tried to turn higher, and it looks to me like it's rolling over. But still in a sideways pattern. Let's see what it looks like. Yeah, the future's the first one, probably JP1. That must be the day.
That's not right. How's that?
Yeah, you can see you can see where it gave it a college try, and then rolled over. But listen, the Japanese economy is something that is, has been stagnant for decades, but they're making changes, and I think the market is trying to figure out whether it's going to work to make them a little bit stronger of a currency. But when your economy is stagnant like that, you can't have too. You don't want to. You don't want your currency to be too strong, because then it costs more money to buy stuff. So there it. I mean, from us at least, but we're the big buyers. But yeah, I mean, look at that. The market is, this is not a good looking chart, although it looks like it may be bottoming. So there's a lot of things to be looking at. I think what we can take out of this particular period of time is that it's really a wait and see for your triggers. It's really defining your trading plan and deciding, at what points you're going to take action, either in continuation of all of this or not. I mean, when it broke back below that below the 200 moving average after breaking it, when you had those three, they used to call those three sisters, those three red lines, right? Do you see what I'm talking? Can you point to those? The three red bars. Yeah, not those.
Oh,
the ones.
Yeah.
Yeah, the ones above it. The first three.
Oh, this one.
Those three that go through the, and then continued by the three red bars. I would be looking for lower. The three sisters are very, very. They're very telling, and that right in between the three sisters is really our loaded gun, our most popular trading plan, short right there. That hesitation right there, and then the movement through the 50. In this particular case, we use different averages in the short term, but that's a very strong signal on the short side, followed by three sisters. The only thing that limits the potential here would be the resistance or the support back of what happened back in November. You're going to have to, and that looks like we're doing the top of that area right now, the top of that range. But this is a weak market, and the Japanese are very slow to change, and so
Well, I will tell you this, as far as my 2 cents on this would be, is that RSI looks like it's building, not deteriorating, and by April there is some talk that they will start abandoning the yield curve control, which has come and gone as far as its purpose is concerned. And so basically, if that were to occur, and if you look at the long-term chart, this thing has lost half of its value. So a change in the yield curve control and a building up of RSI down here a little bit, it could be a correlation to at least a reversion to the mean rally towards blue or gold.
Yeah, that's the other side. When I take a look at a kind of when you see an RSI like that coming off the bottom, but the price is not responding.
No, it doesn't look good. Is there a shorter term chart that might, like a monthly, that might give you an idea that there's a turn happening? Because obviously when these longer term charts turn, it's not exactly the first signal you get.
Yeah, that's a little nicer, although I don't like today's action. Is that today's action?
No, yeah, today's right down again.
But
it's a downtrend. It's a terrible market. I mean, it's obviously a market that's collapsed in value. They're not complaining. Their stock market finally got back to the 1990 levels above 30,000. They actually have some inflation, and their stock market is doing well. So apparently, the currency losing half its value has been very good for these guys because they're an exporting economy, I guess.
There's only one real strong recommendation that I would have, and that's take a trip to Japan and bring your cash.
Exactly. That would be the thing to do, right?
Yeah, and that's the only move I would make right now, I think. Besides staying short. But I'm always looking on. I've learned that the trend. They say the trend is your friend. I mean, the trend is where you should be until the trend changes. and it's those terms that are the toughest thing to say, whether it's just a response or correction in a current trend, or whether we're starting a new one. So, that's where moving averages come in, and we can do a whole show on that at some point. But I mean, that cross right there is a very positive for that fund. Apparently, when you cross back over. But again, look at the resistance we're hitting right now. So this is a watcher. The euro dollar is a much stronger. That's
Why don't you put up the euro? It seemed like it was having a lot of trouble around 110. Is it still having some trouble around?
Yeah, it is. But I do think that in this next push, it will have, we still have the 50 below but look at the narrowing of the. This is where in some of the things that we do when I'm training and when I'm using two moving averages like this, when the moving averages are close, like they are in the middle of this chart, when you get breakouts, when the moving averages are close, those are the ones that generally form the runs.
Yeah.
And you can see it right here. Now, more currently in the last quarter of this chart, we have the moving averages coming together, and therefore some move is likely upon us, but we just don't know where that is quite yet. But I do like the idea from a fundamental standpoint that I mean, look, Europe is under a lot of stress.
And they're supposed to have to cut rates. So I mean, there's if you look at the dollar index, I thought it was way overdone at 115, and I thought it was all done when it went to 100. And now it's at 103 and change. If we could get this thing above the blue line here, it could go. Or like you say, if it's going to stall here, RSI is right at 50. If it is unable to get through 104 and it rolls back down and takes out, starts going back down, then your euro could break out above 110.
Yeah, it's you've got the whole oil situation there. Russia still holding back. You've got the wars. You've got their inflation, which they're not handling as well as we are. So they've got some issues. But I think in this particular market, I would be looking at the measures that talk about the short positions. I think you got to build some shorts here in order to see any kind of a movement happen. But the RSI is not giving us any help. It's totally neutral.
Yeah.
So the chart and the RSI are really in sync. So I think it's going to, I'm going to be waiting until those moving averages come together, like in the middle of that chart, and let it tell me where it wants to go.
Yeah.
And
that dollar index is heavily weighted to the euro. So as the euro goes, so does this thing, right?
Yeah, exactly.
Do you do a lot of cross trading? I run into people obviously all the time, and one guy was what was he? Long the euro, short the Aussie dollar.
No, but often, and I don't do this much unless I see the trends going in those directions. But the Japanese yen tends to move opposite of the S&P, and the euro dollar tends to move with the S&P, and not all the time, but about 80% of the time it seems. And therefore, when I'm looking for a hedge on, if I believe I'm, rather than peeling off long S&P positions, sometimes I'll apply some long Japanese yen to offset it, to give me some sort of a hedge, And what I like about doing that is that you can hedge in little bits and pieces, because the Japanese yen contract is much smaller. So that you can when you get through, when the market is going higher, say in the S&P, and you come across a resistance, if you can apply a few positions in the Japanese yen in the same direction, which, because they move opposite, it becomes a hedge, and it breaks through, you can easily peel off, without abandoning the hedge totally. So I really like using the Japanese yen. Against, I don't hear people do it much. We used to do it a lot more, but against the dollar. But that's the way that I do it, against the S&P.
Do you want to bounce around a couple of stock sectors that are going to have earnings this week and see if there's anything that looks glaring? Like we have some consumer stuff coming out, like in Starbucks, SBUX, and it definitely turned up. I was wondering if it looked like it might accelerate up.
Let's see. Yeah,
But
I've been going with Dunkin' Donuts ever since I've seen this chart. For my coffee.
I know
I
you're
ordered a
right.
coffee machine that somehow it keeps being out of stock, so I have to go out and get my big one broke that I had for 15 years. It grinded up its own coffee.
My tip of the day is you get the Starbucks sleeves at their store. You get 12 of them for $12. So you're paying $1 a cup of coffee. That's the tip of the day. Italian
Yeah.
roast, French roast, whatever you like. Boom.
I don't know. You got the plastic and me with
Well,
the.
no, I mean I bake it at home. Then I have to stand in line with the other yayos
Oh, that's true.
waiting.
Yeah. All
Yeah,
right.
no, I make it right here at the old casa, and I'm getting a good Starbucks cup for $1. It seems like a good deal to me.
Well,
Anyway,
this is what do you? I mean, to me, this chart is a something that I would be again. The moving averages are close. We can't seem to be deciding.
yeah.
I don't see anything here
Well,
to do.
if they get a good report, they could pop it up to 98 or something like that. But if they don't get a good report, and that's these are some of the consumer discretionary that have had a big drop, like Home Depot, HD. They've had
Mm,
a big drop, and so the bottom line is that when good companies that are out there have dropped, sometimes it's a decent time to take a shot at them. This is one as well that you can see had a big run up, pullback, another pullback. So I guess I would call these things all look like they're unresolved, huh?
yeah, it's just this is a little bit more friendly chart,
Yeah,
of course, and I like the fact that it's taken out that high way back when. I don't know how far back that goes, but the fact that it's maintaining, it's accumulating over, it's following the S&P, the light blue line up there. The moving averages are in good stand. I mean, if I was long, I'd stay long, um, and look for pullback of 8 or 10% could be a problem, but then you'd be hitting that support area in the middle of the chart. So I kind of like, listen, Home Depot, when the money comes back and the loans are freer, you're going to see a lot more. And with homes being expensive as they don't expect home inflation to ease much. You're going to continue to see Home Depot do well with reconstructions and remodeling and so on.
yep,
So I think
yep.
there's a good story behind this stock.
On Friday, we had a couple of oil stocks, the big guys, CVX and XOM. Let's see what oil, because they're trading at a discount to where they've been, and this could be something that might start popping. Who knows, right? What do you think of this? Is Chevron?
Yeah, I mean, it's certainly showing potential. It's trying to, it's peeking its head above the 50 off, an accumulation and a double bottom. But it's got some work to do here. I mean,
Yeah,
you've got a lot of energy for 6 or 8 months where it traded, but it certainly could get there. I mean, I think there's a move from here, up about 5 or 10%, but then you're going to have struggles.
what about XOM? Probably the same story. Birds of a feather.
Yeah, really so, really so. And I mean, it's pretty much the exact same
But it
chart.
is discounted. If you want to look at something that's at least discounted, that has been discounted down a little bit.
Yeah, I think people who are looking very, people who are the younger crowd, that have some time. These could be spots to be accumulating things for the long term because I'm a believer that we're not going fully electric yet. And if Exxon, I know that Saudi Arabia and the Arab countries are the largest investors in alternate energy. I'm sure Exxon is doing the same thing, and they understand the value of energy, and that's their business. So I think that those that are afraid that oil is passe, and therefore Exxon is passe, are going to be wrong about that.
Yeah. We
Um,
got a couple of drug companies coming up Friday. One is AbbVie, ABBV, and this is really one of the bright spots in this region, but not a bad looking graph, but looks like the RSI is a little weird, but
no, but I like the red bars there that are producing some shorts for us near the highs. That continues sideways like that. You just put your buy stops in above that accumulation, and I think you're going to have a nice trade. I
Yeah,
like to see.
it's
I
been
like to
going
see,
up. Yeah, yeah.
I like to see selling come in without breaking anything. That usually is a sign of potential strength coming. So, like this chart. What is this?
AbbVie, they have drugs. One that's a dog with a lot of fleas is Bristol Myers Squibb, BMY, Bristol Myers. But they've been trying to come off the mat. I don't know. Not very much, though.
Wow. Yeah,
Yeah.
this
I mean,
is.
that thing's been liquidating. They're also fighting with the government with regards to competitive pricing. So, competitive pricing sounds like your margins are going to go out the window, right?
Yeah, I mean, the only thing I can say about a chart like this is that when it turns, it'll probably have the same kind of look going higher. But for right now, I don't think we're done going lower. This is not
Yeah.
a. This is a company with.
This is the cigar butt on the street that Buffett used to say he used to pick up to try to get one more puff out of.
Yeah, I mean, you could do that. You could do that. But, yeah.
What about Apple? Is there a real turn up here, AAPL? Because it had a hard time with 200, and then it's having a hard time with 195. I can attest to that because I was involved, and now it's hanging in at 191. Is this the pullback and it holds, or is this going to fill that gap underneath the 180, 185?
Well, I mean, for now, I have to be friendly toward it. I mean, it's done some work, and I mean, you're seeing a triple top, but as long as the 50 holds there, um, you know, I think we have a pretty. Listen, when you have all this bad news about a stock, and it really um,
Budge.
doesn't breach at least the 50. Um, yeah, you have something that's coming back. I mean, I'm a big believer in watching, short interest, and
Okay.
it's got to be high right now.
And they come up with this new headset on Friday when they announce their earnings, and it's going to be
3,500 or something.
35, yeah, $3,500, and you can act like you're in Mars or whatever. I don't know. No, but it says it has a lot of features, but some people thought it should have more applications before it's really worth the 3,500.
Well, I tried that thing where you put it on your face, and when I bought one of those last Christmas, and just made me dizzy. But
I bought one from somebody. They use it 3 times, and now it's on the shelf.
yeah, it's on really for me. I'm back to bowling online,
All right, I'd
but
like to talk a little bit, if we could, Norm, about what you're doing for people, not only in the psychological point of view, so you can help them kind of get their head straight a little bit as far as trading, but also this helping people so they could get a funded account. Can you go into that a little bit more now?
yeah, the prop trading is really it's a new setup where I mean, not only are prop trading firms that were built for prop trading firms doing business as in that way, but there are a lot of companies that are just trading companies that are building branches that are operations that are prop trading firms, um, and doing this because there's a lot of money in it for them. I mean, why would any person get? In fact, with Apex, they give me 100% of the first 25,000 that I make, and 90% after that. What they want is go to theirmoneyyourprofit.com. That's the special site that I have, theirmoneyyourprofit.com. And if you have questions about this at all, if you go to the lower right-hand corner of this particular page, you're going to see a Q&A. Yeah, it's right there on the lower right already.
Oh,
And you can add, I'm not there right now, and nobody's on board right now, but you can, if we're not, we could be shortly. Just ask a question and it'll pop up into our email, and we'll respond to it if it's not live. But this is an area where I believe that this is the future. I wrote a paper recently that simulated trading, the death of simulated trading. Because I mean, why would anybody practice trading only to risk their own money? Here you can practice trading at the same time you're qualifying to be funded. And if you're a successful trader qualifying, which would be the same effort that you put in as a successful trader simulated trading, the result is that you got a funded account and you can keep doing the same thing. So I just think in the end, now the negative part is not really negative. It's negative only to, when you lose enough in trading, you're always looking at the costs and the negative side. When you win enough in trading, you always put those aside. And I think there's a relative difference between the fees that they charge on a monthly basis while you're testing. I mean, it's only their list price is $167 a month to test for a $50,000 funded account, but they're running specials all the time, like 80% off, 90% off. So for $16 a month or for $35 a month, you could be testing for this. And it's just that 90% of the people just keep paying that 90%, that 16 or 30 bucks or $60 because they just can't get it together from the mental side. They get excited about it, and they get funded, and then they blow that account out. So you got to be a good trader. None of this works, whether it's prop trading or trading your own money, unless you have control, unless you have a trading plan that fits you and have control. And that's what this page offers, really, is a trading plan that fits you. We have something called nuances that instead of changing you to your trading plan, the nuances are small technical things that you can do to your trading plan that can fit you rather than asking you to change. I mean, it's hard to become a patient person when you're an impatient person. That can be some of the toughest things to do. You wait for a trade for 2 hours and it doesn't happen. You start doing things you shouldn't be doing.
Yeah, I hear that.
Yeah,
because like I say, patience is something that wears out.
So, there's some simple things like dropping and you and I talk about this often, dropping time frames where you can get more signals and less of a risk and so on. So there's things that you can do. Anyway, this trading plan is really tailored toward getting people across. And that's what we're doing. In fact, when I offer this, part of the offer here is one-on-one with me for 90 days, so all the meetings that you need. It's a simple trading plan. I remember when I told you I ran a room of, at one time, 60 individuals just in my office, traders that I had to make sure they were doing the right thing for their people. And the one thing that was glaring right from the beginning was the simple trading plans were the ones that worked. The complicated ones were the ones that caused anxiety and hesitation and chasing markets. So simple trading plans is the way to go with the right elements. You and I have been talking about, very simple charts and the right elements. That's all you need. You don't want to compound things when you don't have to. Anyway, this is where I would go. Of course, it changed the URL here, but the URL is theirmoneyyourprofit.com. And if you just go into that, you'll come to this page, and you can ask me questions in that green button, and I'll do my best to help you out. No cost. So
perfect. As far as options professor is concerned, I'm focusing on the short-term options, the weekly options. The volume's huge, which means a lot of people are trading it. Are they risk? I only do it from the buy side. I'm not writing these things hoping to make 10 cents and losing $10. But the bottom line is they are very risky because they have short term, but their risk is limited on the long side, and they do give you leverage. So the key is how's your timing? And I've got timing indicators I use that I'm very, very happy with. And again, just to give you an idea, I've traded thousands and thousands of these options in my career. I've been at the Options Institute at the Chicago Board of Options Exchange for advanced training. So I'm not exactly the guy who fell off a turnip truck. Is there a possibility I can help you learn more about these options and learn more about how different trades are worked? Absolutely. In my view, if you want to get more information, just go to optionprofessor.com, put your information in. We'll talk. I'll discuss it. I don't have monthly rates and all that stuff right now. It's just a very low cost one-time rate. So I know it's a good deal in my view. So check it out, optionprofessor.com, and see if I can help you with my knowledge and share it with you.
Well, you don't need a boost from me, but as I keep mentioning that I was in the option business, ran one of the largest in the country, and if you're interested, I don't do options anymore and trade for options, but if you need option help, and options really, this kind of market right now, and what's about to happen, options gives you that potential. The leverage can be tremendous, and Jim knows what he's doing. So if you need
the key is your timing, and the key is money management, like anything else. And obviously, they are short term, so they are risky by definition. But you're only supposed to be using your risk capital, so that shouldn't be a problem.
There you go.
Again, Norm, great to talk to you. A great conversation. I'm going to send it back to David, and good luck to everybody out there.
Thanks, everybody.
All right. Thanks, guys. Yeah, a ton of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app, or you can also just go to TimingResearch.com, and this post here at the top of the page will become today's archive as soon as I can get everything updated. You can also find the Timing Research updates on Substack now. So if you subscribe to Substack, just search for Timing Research. Also, just want to thank my guests again for today. Norman Hallett of TheDisciplinedTrader.com, and also, sorry, what was the other one? Their Money, Your Profits, or TheirMoneyYourProfit.com. And also the Option Professor of OptionProfessor.com. All right. Thanks, everyone.